Well, the Ghanaian Cedi plunged to an all-time low against the dollar on Monday as interbank demand for the US dollar continued to outstrip inflows, including central bank supplies. To get more on this development, we're joined from London by David Cowan. He's an Africa economist at Citi. David, it's great to have you on the show today. Well, first of all, I'm sure many Ghanaians are not very happy with this development. I think with the advent of oil production in Ghana, there was a sense that, we're going to get into greater times, better times. And then what we're seeing now is that the Ghanaian Cedi is down 4%. It's depreciated 4% against the dollar this year, making it one of the worst performing currencies in the world today. Take us through your thoughts on the issues here. So many people have spoken to, pointing to the trade deficit, which is about $2.6 billion. David, can you hear me?
No, Wole, I can't quite hear you at the moment.
Okay, let me
faded away. But what I think you were asking me is about the worst performing currency of the Cedi.
Yes, I wanted you to
tell us. Okay, I can hear you better now. Look.
Okay, go ahead.
I think in response to the first point you raised, right, I think it was quite interesting. What you said was that there's many Ghanaians who won't be happy about the Ghanaian Cedi weakening. Well, that's kind of true and kind of not true in a way, if you think about it, right? The way to think about the Ghanaian Cedi is this is a tightly controlled market of which you have three main inflows onto it. Cocoa earnings, gold earnings, and then more recently, as you talked about, oil. And many people believe that oil would be the panacea and drive a period of Cedi stability. Right. But you also have to think of it from the other way. A stable currency is of no particular benefit to cocoa producers, and we're in the middle of the cocoa harvest at the moment. The reality is that cocoa farmers are turning up at the cocoa board, delivering their crops at the moment. The world price is falling quite sharply for cocoa, and what they're going to end up being paid would be significantly lower without this depreciation of the Cedi. Now, if we know that the central bank controls it, we probably can't distinguish the fact that they are aware of this, especially in an election year, 2012, December, the government will go to the polls. So I think we should be careful saying that not everyone benefits from a devaluation. Many Ghanaians, and particularly crucial cocoa farmers, do benefit from a devaluation. Right. Of course, urban populations who look out and see the dollar rate more tend to see it a sign of economic crisis, perhaps a bit more.
All right.
So we need to think very carefully in this case.
Tell me this. Does it have anything to do with the fiscal terms? Because, like we know, oil production has started in Ghana, and I recall just before the advent of oil production in Ghana, there was a view that this economy could grow as much as 20%. Not the reality we saw in 2011, where it grew about 13.6%. But your thoughts on the fiscal terms of oil production in Ghana, does that have anything to do with this wide trade deficit that we're seeing?
No, I can't hear Wole.
All right, David, can you hear me now? Is it any better now?
Yeah, a little bit better now,
okay,
yes.
I was going to ask you about your thoughts on the fiscal terms of oil production in Ghana right now. Is that a factor at play here with regards to the trade deficit?
Well, is it a factor at play, the oil production from Tullow? Well, I guess the one thing is that most people had pretty much expected that Tullow would be at 120,000 barrels per day by now, and they're not there yet. So obviously there is an argument you could put that the market expected the flows to be on it to be much greater than they are, and the delay in getting production up to schedule has perhaps had a negative impact on how the market views the currency. But that's not the real issue here, I think. As I said, I think what you want to bear in mind is that the flows of the three main foreign exchange earners all flow to the central bank. So the decision is the central banks to put the money onto the market, for the market. Ghana's interbank market, compared to many other African countries, is really very undeveloped. And so the issue boils down to, this is a policy decision by the Bank of Ghana. Either it chooses to supply the market or it doesn't choose to supply the market. Now that decision may be driven by the fact that its oil revenue expectations are now lower than what it originally had, but that would only just be one factor of many that it takes into consideration. The gold price, for example, is still high, so that might offset the loss in oil production. As I said, cocoa prices are falling, so you have to put it through the whole prism to think what the bank is thinking.